In this module, we'll be talking about market structure. And from this point, I really wanted to pay attention to this particular model because no matter what the strategy you're going to be trading in the market, you will have to understand market structure. It is a basic skill that is going to that is going to be responsible for for your understanding of the market, that is going to be responsible for your profitability in the market, is actually one of the main skill that if you have a good grasp of, you are going to be really profitable in this market. So let's quickly get into into this into the explanation of the market structure. And just before we go, now you can take your time to watch this particular episode over and over again until you understand it before you move on. Okay. All right. So let's quickly move on. All right. So when we are talking about market structure, what are we talking about? We are simply talking about the market behavior. How is the market behaving? How is the price? What is the price doing? Okay. What is the price doing? That is basically the market structure. Okay. Now, it's an important skill, like I told you the other time, that determines who is in control of the market between sellers and buyers. Okay. Now, you just want to you want to know who is actually in charge. Are the buyers in charge? Are the sellers in charge? And whoever that is in charge, we're certainly going to determine the trend, the direction that the market is actually taking, whether the market is going to be going up or the market is the price is going to be coming down. You understand? It is actually the market structure that tells you, that tells you exactly who is in charge of the general direction of the market. Now, understanding the market structure is actually a critical skill that helps traders with the question of when to buy or sell and the price to buy or sell. You know, take um take uh, take uh, uh, take cognizance of that. Just take note of that. He said it shows you when exactly to buy because you can't just get on the chart and you just want to buy, you just want to press your sell buttons. No, 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 you don't do that. Doing that is going to get you burnt. Okay, so market structure will actually lets you know the proper prices, to actually buy from. It actually shows you, when you have a good understanding of market structure, you are going to be patient when you're supposed to be patient. You're going to take action when you're supposed to take action because market structure is really going to tell you, it's going to show you when the market is ready for you. Okay, when the market is actually ready to really play according, according to what according to what you should be looking at. Okay, all right. So understanding of market structure helps traders determine when to exit the market with profit. Okay, so it is not enough for you to know when to buy or sell. It is not enough for you to know the price at which to buy or sell. The market structure also tells you when it is time for you to what? To take your profit. You don't want to be greedy, all right? You don't want to be greedy in the market. You should be, taking profits doesn't hurt anybody. So the market structure is going to tell you at which point should you be taking, your profit. At which point should you take the money that the market has given to you. Because one thing about this market is that if you do not take profit, the market can take back from you what it has given to you. I'm going to say that again. If you don't take profit in the market can take back what it has given to you. So when you understand properly the market structure, you know exactly when to enter into a trade, when to when to also exit from that particular trade, and taking your profit at that particular point. Now, another point is that it shows when a trader needs to stay away from the market. Not every market is tradable. Not every market is what is tradable. There are times you simply just have to stay out of the market and just be watching what the market is doing, what prices is, what price is actually doing, what is basically the behavior of the market at that point. There are some behaviors that when you see in the market structure that simply tells you that, hey, stay away, traders, stay away from me at this particular moment. And there are times that the market will also, tell you that, okay, fine, I'm ready for you to, really ready for you to take trades now, and I'm really willing to give you money, right? So all of these things are part of the things that market structure is all about, right? Okay, all right. Now from there we're going to be talking about types of market structure. Now we have three major types of market structure. Okay, we have trending market, we have ranging market, we have choppy market, trending market, ranging market, choppy market. We are going to cover everything we're going to cover everything as we go on. All right. But just before we go into the types of those kind of markets, now there are certain terms you need to understand for you to have a proper understanding of of the market structure. To really understand, to have a proper understanding of market behavior. And one of those terms is what we call support and resistance. Support and resistance. Support and resistance. Now, basically, price doesn't just move in one direction. Prices the market will always give fair we always give fair opportunities to buyers and sellers in the market. Okay, it's going to give opportunities to buyers, it's going to give opportunities to sellers in the market. All right, so support and resistance are basically created from swing points in a trend. Don't worry, I'm going to show you what that means in a moment, but just have this at the back of your mind. What support and resistance are. They are created from swing points in a trend. Okay, now as price trends, okay, as price moves, it retraces back on the trend. In other words, price doesn't just go up and go up perpetually, or price just moving down and moving down perpetually. It's going to move up, it's going to retrace back down, and it's going to move up again and retrace back down. Now if price is actually coming down, it's going to it's going to push down, and it's going to retrace back up and push down some more. Now we're going to be looking at all of that as time goes on. So as price trends, it retraces back on the trend, and this retracement leaves a swing point in the market, which in an uptrend looks like a peak, and in downtrend looks like a trough. Okay, so let's quickly look at what we are talking about. All right, now as you can see from here, the price push, the market push from this below up to this particular point. All right, now you see where this price started from, where price began to push upward. This particular point here is what you call support. Okay, now when price got up to this particular point and it began to move down, now the price at which the price got to and it began to move down, this particular place is what is called resistance. Price came back in here, and it stopped going down, and it pushed up again. This price got into before it began to push up, that place is also what? Support. So far we have a support here. We have a support here. Why? Because this is the price where price began, the market began to shoot up, began to rally to the upside. And it got to this particular point and got some resistance from that particular place and began to what? To move down. So this peak here is what is our resistance. And price actually came back in here. All right. Price came back in here, and it got to this point, and it stopped moving down, and it shoots up again. Okay, so this particular place is a support, and right how the price got into this place, and it retraces back to the downside. It began to move down to the downside. Now the price at which the price at which the market began to move to the downside, that place is what is called resistance. Now, from this point again, the market began to what? To push to the to the upside. It means that this particular place is what is your support, and on and on and on like that. Now, this is where we are going to stop the first part of market structure. I'm going to see you in the part 2.